Good time now to discuss the markets more in detail. We have Rajat Rajgarhia, the MD and CEO at Institutional Equities, Motilal Oswal Financial Services, Amit Ramchandani, who's the MD and CEO Investment Banking at Motilal Oswal Financial Services, and Ashish Shanker, who's the MD and CEO of Motilal Oswal Private Wealth, who joins in now from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. So we have a full house this afternoon. Gentlemen, welcome to the show. Well, Rajat, I'm just going to toss this question to you. There seems to be some amount of risk on, which is back for the markets at this point. The mid-cap index is up around 1.5%. The headlines from India-China talks as well as the India-Russia talks seem to be more positive in nature. Do you think that's fueling some amount of sentiment for our markets at this point, Rajat?
Yes, hi. I think there are two important things. First, our underperformance has been very stark vis-a-vis the other global markets. Second, I think at least people are now looking forward to some reforms from the government, the GST meeting, a lot more things which are there in the offing. The last 2-3 days of headlines where our Prime Minister has been forging more new partnerships and better relationships with our neighbors. Just all in all, these things are helping the sentiment, which has been impacted quite badly over the last few weeks, led by the tariff news.
Right, we take that point, Rajat. But while we speak about wealth creation, sophistication, there are three major legs to that, so to say. One are the institutions, the second are the HNIs, and the third are the investment bankers, and as a result of which, the ones who make all these things possible. Let's talk about the institutional side itself. The last 3 years or so, we do have, serious money coming in from the DIIs, not so much from the FIs. In fact, if anything, the DII money is letting the FIs exit. And this at a time when everyone is looking at India as the next tactical, long-only allocation and not just, a purchase for the moment. What explains this, and what do you think will bring the FII money back to us?
Well, I think at some point of time, as you will see headlines stabilizing and the macroeconomic and news flows being better, you will see FIs coming back. But I want to harp on two things. I think we give too much of headlines to the FII outflows and we give too less prominence to the DII inflows. This year, in the first 7 months, 8 months, we have already seen $60 billion of DII inflows into the market. I mean, pause that. It's $60 billion in 8 months, and with this trend, we should hopefully be $80 to $90 billion. In true sense, the Indian capital markets are exhibiting the Atmanirbhar Bharat theme that has been being played out. We do welcome the FII flows, but last 5 years we have seen how volatile they have been. What has been most predictable is the large savings domestic pool of money. I think that is going to be the story of this market for the next 5 years. That number is only going to get bigger. In this journey, if FIIs join us again, and they will join us, the real party will begin then.
Absolutely, real party will begin then. But, Amit, just coming to you in terms of, we've seen a lot of PE exits in the recent time, promoter exits that are coming in as well. Do you think the Indian market is in a space to absorb? Are we seeing a growth on that front as well?
So we definitely are seeing a huge growth there. I think from the mindset where investors were just willing to give primary to the companies, we have come to a scenario where they are very comfortable doing secondary exits as well. I think the point is well understood that if money is not required in the company, it is better that the promoters or Ps take secondary exits. We have seen the cycle also only enhance. Initially, we saw investments of smaller number, maybe 1,000, 1,500 crores was something which PEs were investing, but today that number is up to $1 billion. We are seeing a lot of large transactions, and that's only because they have that faith that they will be able to exit. We have seen a lot of companies where large stakes of PEs got sold very easily. Right? We've also seen transactions where only PEs were there and they've been able to exit the entire stake through markets. So I think the investor outlook is clearly changed for secondaries, and whether it is the promoter or PEs, mutual funds as well as other investors are very happy to give those exits.
Okay. All right. Well, Ashish, I just wanted to come to you with regards to the HNI segment, because if you look at the statistics, they're absolutely mind-boggling. 33,000 millionaires added in 2024. The ultra HNI category is growing at around 12% CAGR. In that context, what do you think the pace is going to be? Do you think this kind of pace is going to continue, considering a little bit of the uncertainty that we're dealing with when it comes to markets? And I just want to add that, the 20 to 50 crore real estate space in the residential market seems to be slowing a little bit. Is that an indication of things to come? Ashish.
So, we look at the space in three different segments. So if you take the top end of the segment, and you can cut the number as you like it, but the way we look at it is the family office or ultra HNI segment starts at about 100 crores, right? So today we've got about 20,000 families in that segment, and the total wealth pool is about 240 lakh crores. That's a staggering number. Now if you come down to the 5 to 100 crore segment, you've got roughly about 70,000 families, right? But the wealth pool goes down as you go down the pyramid. It's about 23 lakh crores. And then if you go to the next segment, which is the 1 to 5 crores, you've got about 4 lakh families, right? Now, if you look at the total pool of wealth from a family point of view, it's growing at about 5%. So that's the number of families, right? But the total wealth is growing anywhere between 13 to 14%. So the total wealth is growing faster than even the nominal GDP. What is driving this growth of wealth is, of course, like Amit said, there are a lot of monetizations happening. Now, these monetizations either happen at a promoter level or they happen at a professional level, because increasingly a lot of companies which are PE funded offer pretty decent participation for professionals as well in the wealth creation journey. Second, what is happening is that you're seeing an explosion of professionals with a lot of newer industries getting momentum. And thirdly, you're also seeing traditional wealth shifting to financial assets. So whilst we've seen a lot of interest in luxury properties, we've also seen people shifting from traditional assets, which are physical in nature, to financial assets. And this is basically driving growth. We believe this compounding of 13-14% in the total wealth pool will continue in the days ahead. As far as your second question is concerned, I think in the near term, I think Rajat spoke about it. I mean, there are obviously challenges. But I think sometimes we get caught in the near-term noise and tend to underestimate the longer-term picture. We believe the longer-term growth picture is very, very intact. If you take a 3 to 5 year view, the wealth pool is probably going to double in the next 6 years. So there is a lot of opportunity ahead. The other big trend to also follow is a lot of this wealth is getting organized. So whether it is at the promoter level who are creating formal family offices, and formal family offices like to deal with more organized wealth participants. Similarly, what is happening is even in the industry, a lot of share is moving to organized wealth platforms. So you'll see a confluence of these three trends driving growth over the next 5 to 7 years. Take that point entirely, Rajat, Ashish, Amit. Thank you for whetting our appetite on the potential that this market, our market, and the economy holds over the next 5 to 7 years, notwithstanding the very near-term volatility and underperformance. Global investors looking at India as a strategic shift as against just a tactical buy. HNIs and all the investors are now getting a lot more sophisticated, with record paper coming in over the next few years as well. So all these factors keep our markets buoyant. We wish you to have a good conference, and we'll have this conversation once again, in a couple of months, revisit the trends that we are speaking about right now. With that, we'll take a short break, and as we do that, let's which is extremely important to us, the good news that comes in for all you viewers. India's business news leader, just a click away on the CNBC TV 18 all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, anything that you want at your fingertips. You can download the app either from the Apple Store, the Google Play Store, or just scan that QR code, which is up for you on the screen.